Check out the currency market. Dollar edging higher against the Japanese yen and the euro as Fed Chair Janet Yellen speaks at this hour in Jackson Hole. We want to discuss the Fed's task ahead, plus Janet Yellen's speech. Joining us, former Dallas Federal Reserve Bank President and CEO Bob McTeer. Good of you to join us, Bob. Good to see you.
My pleasure.
Judging by the market reaction here, strong dollar, strong stocks, higher treasury yields. Janet Yellen didn't do anything to disrupt this remarkable equity market rally that we have seen. Obviously, there's a thoughtful debate going on within the Federal Reserve. How tricky is it for her going to be to defend the Fed's easy policy and worry about the slack and at the same time return to a world where they're thinking about normal policy again and higher rates?
I think she's made some progress in moving toward her critics. I don't think this talk was as dovish as it could have been. I think it wasn't hawkish, but I think she struck a good middle of the road chord.
If you were still on the Fed, obviously every regional Fed has a different sort of flavor, and Richard Fisher of the Dallas Fed has been very vocal criticizing some of the Federal Reserve's easy policy. Where would you think the interest rate should be right now? Would you have moved it up even earlier?
Yes, but not as early as Richard would have. He's had that position a long time when I still thought the Fed's policies were just about right. However, now I tend to agree with him more. Time has passed. We've moved toward the goals in the right direction, and I think maybe that interest rate move ought to be a little earlier than the middle of next year, when it was going to be in the middle of the next year. May I say that this...
Carry on, sir.
I just wanted to say that this structural versus cyclical debate is extremely important because that determines the potential of the economy to grow in real terms. And the Fed doesn't want to be trying to make it grow faster than that potential or be inflationary consequences. One thing that's missing from what I heard of her speech was references to productivity. People are always referring these days to wage inflation. And she mentions that higher wages are not inflationary, but I think that she needs to put more emphasis on what's happening to productivity. And it's been pitiful the last 3 years.
And where would that take you? Where does that then lead you as a logical conclusion if she did?
You know, in 11, 12, and 13, productivity grew less than 1% a year on average. In the first quarter, it declined 6.5%. What this means is that the lowering of the labor force participation rate and the employment population ratio is being exacerbated by the fact that existing employees aren't producing any more than they have been. Okay. Not only do you have fewer workers, but you have fewer units per hour worked.
Let me take you back to the central point that you're making, Mr. McTeer, which is that, and you're agreeing with, in effect, with what our senior economics reporter Steve Leisman said, that Janet Yellen has decided to move to the center. She's decided to answer, as you put it, some of her critics. So when she makes an assertion about the labor market, she also qualifies it, it would appear from what we've seen so far, with the counter-argument. Why do you think that she is moving, if she is to the center at this time? And what is the path that she's now setting herself on, presumably working towards a point at which she's ready to say enough is enough, we're hiking?
Well, I don't think she's moved a long way. And the reason she's moved is she's supposed to be data dependent, and the data have been coming in a little better than anticipated, especially the unemployment rate.
Help me out here, Bob, and I know you've spent 36 or so years in the Federal Reserve System, so maybe you can translate this. Here's a quote from Janet Yellen's speech today, quote, "Assessments of the degree of remaining slack in the labor market need to become more nuanced because of considerable uncertainty about the level of employment consistent with the Federal Reserve's dual mandate of stable prices and full employment." What on earth does that mean? What is the takeaway exactly for markets as they try to figure out how to trade this speech?
Well, I guess she's just saying it's not really simple. You have to look at all these labor market indicators together and make a judgment about things. I do think that looking at them together leads you to think the economy is a little stronger than it appeared to be just a few months ago.
Is there too much focus on slack? I mean, slack is sort of a new concept. Janet Yellen focused on it. We can also call it the Yellen dashboard and some of the other indicators besides the unemployment rate. But is there too much focus on that given the limitations of monetary policy?
Well, Janet Yellen is a Keynesian economist, and slack has always been part of the vocabulary of the Keynes. It's what it used to mean is sort of the combination of the unemployment rate and the capacity utilization rate. If unemployment was high and capacity utilization was subpar, then you'd say there's a lot of slack in the economy, and therefore you can run the economy hotter without inflation.
All right, well, certainly was an academic discussion, so thank you for talking us through. We needed a PhD economist for that. Bob McTeer was the former president of the Dallas Federal Reserve.